Service exports from India scheme benefits under FTP. Ajay Chopra, MBA. March 20. Overview. Service exports from India scheme, incentive not to be missed. Service exports from India scheme, SEIS, was introduced in the Foreign Trade Policy of India 2015-20, FTP, with the objective of promoting exports of notified services. The FTP provides for eligibility criteria under the scheme and covers supply of a service from India to any other countries, generally B2B scenarios, and service from India to consumers of any other countries. As a benefit, a reward for services exported is available in the form of duty credit scrips, as per notified percentage, 3 to 7%, of net foreign exchange, (NFE), earned during a financial year. The duty scrips can be used for payment of basic customs duty or can be sold in the open market to buyers who in turn use the scrips for payment of basic custom duties on imports. It is also important to note that application for the incentive with respect to the financial year, FY 2015-16, cannot be filed after March 31, 2019. Therefore, it is relevant for various industry sectors to examine their eligibility for SEIS benefit before this date. Coming on to the relevant sectors, the notified services which are eligible for benefits are as per the identified CPC provisional codes prescribed under Public Notice 03/2015-20 dated April 1, 2015. While few sectors like consultancy services, back office accounting support services, bookkeeping services, manpower supply services etc. have applied for the SEIS benefit and have received it in the form of duty scrips from the concerned Office of the Director General of Foreign Trade, DGFT, there are certain sectors who contribute to the foreign exchange earnings of the country and should also explore the possibility of getting the incentive in time. Additionally, certain services rendered in customs notified areas to a foreign liner, or procured by a foreign entity in case of services included in rental of vessels with crew, are considered as deemed recipient of foreign exchange even if the consideration is received in Indian national rupees and therefore, such services are eligible for rewards under the SEIS scheme. While the list of services seems to cover several sectors, it is relevant to note that there are certain exclusions for SEIS purposes. Few of them are as below. Foreign exchange remittances related to financial sector like raising foreign currency loans, bond sale of securities etc. Foreign exchange turnover by healthcare and educational institutions like equity participation, donations etc. Export turnover relating to services of units operating under /EHTP/STPI/BTP schemes or supplies of services made to such units. Foreign exchange earnings for services provided by airlines, shipping lines, service providers flying from any foreign country to any foreign country routes not touching India at all. Service providers in telecom sector etc. It is important to note that recently the DGFT has updated the filing process and procedure for claiming the incentive. While there has been issues with respect to the documentation to apply for the scheme in the past, specifically for cases where importer-exporter code is not available at the time of provision of services during the relevant claim period with the service provider, such procedural lapses should not be detrimental to the benefit envisaged under the scheme, considering the scheme to be an incentive scheme for exporters. Additionally, the Delhi High Court has recently admitted a writ petition on this issue. It is relevant to mention here that in the service tax regime, similar issue is faced by exporter of services eligible for refund for unutilized input tax credit with respect to export of services, and refund of input credits was allowed for cases where there was a delay in obtaining the service tax registration. It is the responsibility of applicant to maintain documents in relation to SEIS scrips for a period of at least 3 years from the date of issuance of scrips. Further, dgft can select certain SSE to whom scripts have already been issued on a random basis and may call for original documents for further examination in detail. In case any discrepancy and/or overclaim is found on such examination, the applicant shall be required to rectify such discrepancy and/or refund overclaim in cash with prescribed interest. Overall, SEIS benefit seems to be a good scheme to incentivize the specified industry sectors engaged in exports from India, and it is still not late for the industry to examine and apply for the SEIS benefit under the scheme. Service Exports from India Scheme, hereinafter referred as SEIS, has been introduced by the Government of India under the Foreign Trade Policy 2015-20 WEF January 4, 2015, hereinafter referred as FTP, replacing the erstwhile Served from India Scheme, SFIS, under the FTP 2009-15. Under FTP, SEIS incentives are given to the service exporters in the form of scrips, which are transferable and can also be used for making payment of duties. Objective of the SEIS scheme. According to Chapter 3.07 of the FTP, objectives of the SEIS scheme were as under dash. Encourage and maximize the exports of notified services from India. Exports to be globally competitive. Provide exporters a level playing field. Rewards to exporters to offset infrastructural inefficiencies and associated costs involved. Service Exports from India Scheme. Service Exports from India Scheme, SEIS, is an incentive scheme for export of notified services, in terms of Chapter 3 of FTP. Read with Para 3.04 of Handbook of Procedures, HBP. Under this scheme, service providers of the notified services get rewards in the form of duty credit scrips, hereinafter referred as scrips, at the rates specified in Appendix 3D of HBP on net foreign exchange earnings. Major services covered are legal, accounting, architectural, engineering, educational, hospital services, hotels and restaurants, and other business services. Export of services covered under SEIS. For obtaining rewards under the SEIS, service provider should provide eligible services, as specified in Para 3.10 of FTP, and applicable rates in Appendix 3D of HBP, which are covered under respective Central Product Classification, CPC, code. The list of eligible services are: business services, communication services, construction and related engineering services, educational services, environmental services, health-related and social services, tourism and travel-related services, recreational, cultural and sporting services, other than audiovisual services, transport services. Benefits of SEIS. The benefits under SEIS would be admissible on Mode 1 and Mode 2 services provided by service provider. The term service provider has been defined under Para 9.51 of FTP. The features and benefits of the SEIS scripts, as per Para 3.02 of FTP, are given below dash. Duty credit scripts and goods imported, procured against these scripts shall be freely transferable. Scripts can be used for payment of basic customs duties, composition fee, for export obligation, EO, defaults, authorizations issued under Chapters 4 and 5, I.E. Duty exemption schemes and EPCG scheme, of FTP, application fee under FTP, if any, and fee for permitted import of inputs or goods, except items listed in Appendix 3A of HBP, that is, except items not allowed for import under export from India schemes. However, penalty, interest shall be required to be paid in cash. Once scrip has been issued, request for splits could be permitted with same port of registration for ED-enabled ports in terms of Para 3.09 of HBP. However, as per Trade Notice Number 11/2018 dated 30.06.2017, GST compensation cess, IGST, CGST and SGST as applicable should be paid and can be availed as input tax credit, if eligible, as per GST provisions. Trade Notice Number 11 DT.30.06.2017_DGFT.PDF. Conditions for obtaining scripts under SEIS. Service providers should satisfy the eligibility for obtaining the scripts under SEIS. Service providers located in India are rewarded under this scheme for rendering the notified services on satisfying the eligibility as under dash. Service provider should have minimum net free foreign exchange earnings of $15,000 in the preceding financial year, however, $10,000 for sole proprietorship, individual. Net foreign exchange earnings for the SEIS scheme is defined as under. Net foreign exchange equals gross earnings of foreign exchange, minus, total expenses / payment / remittances of foreign exchange by the IEC holder, relating to service sector in the financial year. If the IEC holder is a manufacturer of goods as well as service provider, then the net foreign exchange earnings shall be considered for service only. Payment in Indian rupees for service charges earned on specified services shall be treated as receipt and deemed foreign exchange as per guidelines of Reserve Bank of India as specified in Appendix 3E of HBP. Service provider shall have an active importer and exporter code, IEC. Should have the valid registration cum membership certificate, RCMC, issued by the competent board or authority. Other conditions as specified by the government under special provisions from time to time. Ineligible categories under SEIS. There are certain ineligible categories specified in Para 3.09 of FTP, which are given below dash. Foreign exchange remittances, sources of earnings. Equity or debt participation. Donations. Receipts of repayment of loans. Any other inflow of foreign exchange, unrelated to rendering of services, etc. Export turnover relating to services of units operating under /EHTP/STPI/BTP schemes or supplies of services made to such units. Special provisions. Government reserves the right and public interest to impose restrictions/change the rate, ceiling on duty credit scrip under this policy, etc. Due dates of filing SEIS application under FTP. Last date for filing of SEIS application. According to Para 3.15b of the HBP, last date for filing of SEIS application, for obtaining duty credit scrips, shall be 12 months from the end of relevant financial year of the claim period. Filing of SEIS application after last date with late cut. In order to file SEIS application after expiry of the last date, then the late cut would be applicable as per Para 9.02 of the HBP, that is wherever any application for any fiscal, financial benefits under FTP is received after expiry of last date, then application may be considered after imposing a late cut. Procedure for obtaining duty credit scrips under SEIS. According to Para 3.04, an application for grant of scrip under the SEIS for eligible services rendered shall be filed in the respective Ayat Muriyat Form ANF by opting respective jurisdiction of Regional Authority RA. Procedure for obtaining SEIS, duty credit scrips as under dash. An application should be filed online for a financial year on annual basis in Form ANF3B along with certification from Chartered Accountant/Cost Accountant, Company Secretary, as per Para 3.10 of the policy, in prescribed format, enclosures of Form ANF3B by choosing any port as port of registration. Opting the jurisdictional regional authority RA based on corporate office/registered office, head office/branch office address endorsed on the IEC. Once an option is exercised, no change would be allowed for claims relating to that year. However, after online filing, it would be recommended to submit the said application along with the duly signed supporting documents to the RA, as few RAs were issuing deficiency letters seeking self-certified copies. Jurisdictional Regional Authority, RA, shall process the application received online after due scrutiny and may issue the duty credit scripts at the specified rate on their net foreign exchange earnings. Issuing hard copy of physical duty credit scripts had been discontinued and made it online for ease of doing business. WEF October 4, 2019 Vitae Trade Notice Number 03/2015-2020 dated March 4, 2019. Risk Management System, Audit Mechanism. As per Para 3.19 of FDP read with Para 3.17 of HBP, every month computer system in DGFT headquarters, on random basis, will select 10% of cases for each RA where scripts have already been issued. In this process, for examination in detail, RA may call for original documents, such as original supporting documents, insure backed by proper acknowledgement. AGSHs attached to ANFs. Any other document uploaded digitally at any time within 3 years from the date of issue of scrip. In case any discrepancy and/or overclaim, the applicant shall rectify such discrepancy and/or refund overclaim in cash or surrendering the original scrip, with interest at the rate prescribed under Section 28A of the Customs Act 1962, from the date of issue of scrip, in prescribed manner, within 1 month. In case the applicant fails to submit the original documents, rectify the deficiencies, refund the excess claim as stipulated above, RA will initiate action as per FTDR Act and rules. Validity of scripts and preserving of records. Validity period of scripts. According to Para 3.13 of HBP, duty credit scripts shall be valid for a period of 24 months from the date of issue and must be valid on the date on which actual debit of duty is made. Revalidation of scripts. In terms of paragraph 2.20c of HBP, revalidation of duty credit scripts shall not be permitted unless validity has expired while in custody of Customs Authority, Regional Authority. Preservation of the scripts, documents, and records. The applicant should maintain the records, documents, certificate, etc., as per the policy, for a period of at least 3 years from the date of issuance of scripts. Conclusion. SEIS rewards may be claimed, under Chapter 3 of FDP, on notified services such as legal, accounting, architectural, engineering, educational, hospital services, hotels and restaurants, other business services, etc. On fulfilling the eligibility criteria specified for SEIS, duty credit scripts would be issued, which could be used for payment of all customs duties such as basic customs duty, additional customs duty and fee for import of inputs or goods, except items listed in Appendix 3A of HBP, that is, except items not allowed for import under export from India schemes. It would be the responsibility of the applicant to maintain certificate, certain documents, etc. If applicant fails to submit original documents, rectify, refund, etc. Action could be initiated by concerned RA as per Foreign Trade, Development and Regulation, Act, 1992 and its rules. In case any discrepancy and/or overclaim, then the same shall rectify and/or refund, surrender the original scrip with penalty, interest as applicable, specified within 1 month from the date of issue of scrip. However, on submission of any document to department should have proper acknowledgement. Disclaimer: this is purely for educational, information purpose, which are personal views. Please refer the respective provisions of the policy, trade notice, public notice, etc. and take the professional advice before taking any action in this regard. Special thanks to Ajay Chopra, MBA, for pinning this article. For any further queries, comments, please write to Ramyan555@gmail.com. www.gftconsultancy.com.